Hello traders, happy new year to you all. Happy new year to you all, wherever you are, whatever you are doing, whatever you are going through. We wish you a very happy new year 2010. Let the year 2011, not 10, but 2011, be a year of prosperity to you all. May all your best wishes come true. That's directly from TSTW SYS08 TSTW 24 trading system. We wish you the very best in the new year 2011. Okay? For those who do not know who we are the TSTW 24, the TSTW SYS08 traders. Okay? And those of you who have been supporting us, marking our video, commenting, sending us emails, sending us videos. We thank you very much for all your support, for everything you have done for us in the year 2010. And we wish you the very best in your trading. Okay, together we will cream this market consistently. Okay. This is the Australian dollar US dollar currency pair on the historic daily chart. Okay, I always mention which daily chart I'm using because those who have been following us know that we use the intraday daily chart, which is 24 hours, 24 times 60, which is 1440 minutes. That's the intraday daily chart, and this is the historic daily chart. This is what many traders are using, and we are looking at the Australian dollar US dollar currency pair. Now, why am I choosing all the time the Australian dollar US dollar currency pair? Because right now in London it's cold, so it's good to think of some nice places like Australia. Okay, lovely people. Happy New Year to all the Australia TSTW 24, TSTW SYS08 traders. Okay, we wish you the very best in the new year. What do we see on this currency pair? Because this currency pair has a very beautiful year. Okay, in 2009 it was pure uptrend for this Australian dollar US dollar currency pair. It was just uptrend non-stop. If you did buy this currency pair in January 2009 or March, purely from March 2009, and you leave it up to now, you will be very rich man. It was just pure uptrend from 2009 to 2010, even and all year long this currency pair was just going up big time, non-stop. There was some pullback, but the general direction was uptrend, which is due to commodity. People were buying commodity. The money was leaving the stock market, going into commodity. In doing that, the dollar was going down. Okay, so gold is going up, dollar going down. This is the normal trend. Now we have seen this year was a pure uptrend. We are expecting in 2011 a bit of profit taking. Okay, so don't be surprised for this currency pair to give us what I call a very overdue pullback. Okay, because what I call overbought market is happening right now in this currency pair. But you need to remember very carefully what I'm going to say now and pay attention. This Australian dollar US dollar currency pair, we usually follow the Euro USD currency pair. Okay, there are times when they will diverge, which means they will go in a different direction, but in most time they will go in the same direction. So we are bullish towards the Euro USD. So when the Euro USD is going up, there is a chance that many traders will still keep buying the Australian dollar US dollar currency pair. But right now I'm a bit bearish towards this currency pair because of the whole year going in the uptrend. Does not mean that it cannot continue, but in a normal condition, this currency pair, the Australian dollar US dollar currency pair, there must be some profit taken. So I'm watching, even though I know that this currency pair will be following the Euro USD, I'm watching for excellent opportunity for selling. If there are some opportunity to sell, I will definitely take advantage of that. So I'm watching carefully. This is one of the stock that I put on my watch list. So you will be following the Euro USD, but when I see that the smart money start pulling their money out of the commodity back into the stock market, I will be looking for opportunity to sell by all means this currency pair. So as a TSTW24 trader, or as a TSTW-SYS08 trader, you must put this currency pair on your watch list. But whenever you want to trade it, you watch the Euro USD also and know exactly whether there is some changes in the sentiment of the market towards this. This currency pair will be very, very interesting this year. So we should be watching carefully the Australian dollar, US dollar currency pair to monitor carefully the sentiment of the market. This currency pair will let us know the change in the sentiment in the market, whether there is the money now flowing out of the commodity market back into the stock market or not. We will watch carefully this Australian dollar, US dollar currency pair. I have here the 5 wave, the first wave, which is the blue one here, from here to here, that's the first wave. It was doing exactly the same thing that the Euro USD, if you remember clearly the chart or the daily chart of the Euro USD. The second wave from here to here, okay, exactly there, similar like the Euro USD. And the third wave where I put the yellow line is my favorite color because I am specialist of the third Elliott wave trading, especially when it comes to the swing trading. So I like to catch the big move because that's where the smart money like to make their money. They come in quietly and make money here smoothly. And the beauty of the third wave is that the smart money, once they create the trend, they are the one usually create the trend. They don't like to give up. They will support the trend until the trend has ended. And right there, they came out here, and fourth wave is the green one here. And then the fifth wave right there. Late comers come into the fifth wave. And when the fifth wave has started, the psychology in the fifth wave is that many retail traders that miss this long, beautiful third wave, now they realize that the trend is going down and they will buy here. When they are buying in the fifth wave, the smart money starts selling down because they are expecting the ABC corrective move, which you have here, the A, which is the white section here, the B, which is the brown one here, and then the C here. The same story over and over. You may get a bit fed up with me with this talking about the Elliott wave no stop, but why am I talking about this? Because now you have the tool, the TSTW24, the TSTW-SYS08. It is important, okay, that you master also the Elliott wave theory and also the Fibonacci retracement and the Fibonacci projection. You cannot become a better trader. You cannot, okay, have a career, okay, in the stock market without mastering the Elliott wave theory and the Fibonacci retracement and the Fibonacci projection. The professional will take advantage of those opportunities and they will understand what the market is doing, which point we are in this particular currency pair. So if you understand Elliott wave, okay, you will know clearly, okay, that at this zone here, these are time that you should be looking for opportunity to buy, not for opportunity to sell. So if you are buying on top here, like the people who are buying last buy here, only to see the ABC corrective move. But if you understand a bit of Elliott wave, you won't get into that trap, okay? And also, if you know how to locate the third Elliott wave, you will be creaming the market. This is what I call cream the market, which means you position yourself, you buy when it was time to buy. Right here, you see, it was time to buy right here. This is the time to buy. I'll show you where there was a time to sell. It was time to sell right here. Okay, that's where the market is overbought. That's what we call overbought. So when people are talking to you about overbought market, okay, overbought market, this is overbought market where I'm moving my cursor on top of the fifth wave overbought. And then when the market is overbought, the market will give the ABC corrective move. Whenever you hear the ABC corrective move, it's because the market is considered as overbought and the market should correct itself. That's why I say to you that the market does not hide anything and everything is right here in the price in front of you. It does not mean that you do not open your ears to the fundamental and pay attention to the news, that you are completely 100% without no other sugar or salt and pepper, okay, so to speak. You are never 100% technical. You are both fundamental and technical. That's the approach that we encourage in the market. Do not be 100% technical, do not be 100% fundamental, be both, okay? The median line, that's the way to success in the stock market, okay? So then we have the ABC corrective move. Like I said to you before, the ABC corrective move can repeat itself many times. So the market can correct itself. So when the market says it's overbought, it corrects itself, ABC. If we do not reach a fair value, what we call a fair value of the price, the market will continue to correct itself. So ABC, the market says it's not fair value yet. ABC corrective is not yet fair value. The market will correct itself till it reach a fair value. Right here, the market consider this level here as a fair value. It turned around, went up again. A bit of ABC, A, B, C, small one here. But because this place was considered already as a fair value, it was a higher low. People bought it again. Why am I now bearish? Because the whole year this currency pair was going up, the Australian dollar US dollar currency pair. We are now at the top, and it's almost in the same zone like on top here where the market was considered as overbought. Okay, so be very careful with regarding this Australian dollar currency pair. I will draw a horizontal line there for you in the zone of the overbought, which is 10168. 10168. The price crossed above it, okay, last time, the last trading day, okay, right here. But be very careful that this is not a fake breakout or not. Watch carefully. What I will do, I will put a spotlight there for you. Watch very carefully this zone. That is not a bullish trap for the breakout traders, okay? Watch carefully this zone of 10168 regarding the Australian dollar US dollar currency pair. Be careful. Watch this level carefully here. If the price fell to find a support above the 10168, okay, the price will come back down, okay? It will come back down. But if you find a support above it and you are trading it to the upside, be very careful. Always trade. For day trading, I would prefer day trading in this particular case, and trade it carefully with this Australian dollar US dollar currency pair. And if you see a clear-cut selling signal, especially for the TSTW SYS08, you should take it when it's a clear-cut selling opportunity in this zone. Watch out for the Australian dollar US dollar currency pair. We are now, the price break this level of 10168. You can see here, the best thing is for the price to give us at the next opening day, which is a Sunday to Monday when the market open, to give us a healthy pullback to retest this level. The market does not have to pull back. If the market is too bullish, it will not give a pullback. If there are some fundamental reasons why the price should continue without pullback, it will continue to up without pullback. Okay, if you have a lot of momentum traders, crazy traders, so as I like to call them, no one is crazy though, I prefer to call them crazy momentum traders. Okay, if they push it up further down without retesting, okay, the price may continue. But in the normal, in the language of the smart money, those who are putting millions to the market, it's so important for them to have the pullback to confirm the validity of this level as a support level in order to continue the movement to the upside. Another trap that people fall into very often, when a price retests, which means we have a red day to test this level here, they will quickly buy. Okay, but if you are buying, your stop loss must be very controlled. So you know have excellent risk management in place in order to, if you want to buy straight away, to have a tiny stop loss, very important, okay? So then you will use your TSTW24 or TSTWSY08 to enter the market and continue the movement to the upside. But I'm watching carefully this level because this market, in my view, is a little bit overbought right now. We will watch carefully and look for opportunity to sell if the opportunity to sell is given to us either with the TSTW24 or the TSTW-SYS08. Going back again to the third Elliott wave, which is right here, the time to buy. In this particular case here, the market gives a healthy pullback. This is so important, very important. The only time that the market sometimes does not give any pullback at all, repeat, the only time that the market sometimes does not give any pullback at all is during the third wave. The market will just go boom, 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 boom till it reaches the top, and then come back down, because everybody locate the third wave, which some people call a recognition wave, okay, because it's so obvious, it's so clear that nobody's going to mess up this movement to the upside, and everybody will be jumping in, buying in anywhere, anyhow, and the market will just continue to the upside. The stochastic will be overbought. People will be selling if they don't know how to buy, to use the stochastic. When the price just ignore all their selling orders and the price continue the movement to the upside, that's where those who are using the stochastic indicator will lose a lot of money. Those who do not know how to use the stochastic indicator will lose a lot of money during the third Elliott wave. This is where the money is made. The pullback, the second wave, which is the what I call the healthiest pullback, was so important because now the trend has started somewhere here. The smart money who locate, if you are smart and you locate the beginning of the trend, the TSTW24 trading system will usually give what we call a double green signal. The gorgeousness or the beauty of the double green signal, it allowed the trader to locate the beginning of the trend, to give the trader the opportunity to enter the trend at the safest place with a very limited stop loss. So you are in a pole position. If you are taking out, you're not going to call your mother for that, okay? Of course, you won't call your mother for that because your stop loss is very limited, and you enter the trend. On a daily chart, you receive your double green signal. You are at the beginning of the trend. When you locate a clear-cut double green signal, and you know how to filter it out, because we have the tool to filter out the fake double green and the fake all the fake signal. We know how to filter them. You know that this is a valid one. You open two position, okay? You let one run first to the end of the first wave. You take your first profit. You let other one remain in the trend. The price will give a pullback, which means they erode some of your profit. The price gives you again the third, okay, the third give you the third Elliott wave, and you enter again, and then you cream the market again to the upside. The gorgeousness of the third Elliott wave is that many smart money, many big wallets will enter the market there and will maintain the price, because when you are entering the trade, you want the price to be supported by the smart money so that they don't mess up your trade for you, that you work together with the smart money in order to cream the market together, okay? Very important. Another point I want to make in this video, okay, talking about trading system, okay. Now, one thing that is so important in trading is that you must, by all means, have a trading system, okay? Whenever I say that, some people scratch their head, but it took me more than a year to find a trading system. This was one of my biggest problems. Now, before you even consider risk management, which is the number two for me, the trading system that works is the number one. The second is the risk management, because if you do not have a trading system that works for you, you are not even in the game. You are just rinse and wash at every time. What do we mean by rinse and wash? Okay, you buy when everybody's selling, okay, and then you are quickly taken out. That's what I call rinse, okay, and then you buy again when everybody's selling, okay, so you are now washed, okay, and then you buy again when everybody's selling, or you sell again when everybody's buying. You are just doing the opposite of the general markets. That's what we call rinse and wash, okay? So you don't have any system in place. You do not understand the language of the price. You don't know what is going on. You're just going up and down, and you are in fact paying other traders. It's a very bad thing, and I know how it's like to be. And the second thing, once you have a trading system, it doesn't matter which trading system you're using. If it's working for you, that's fine. You must manage your trade, okay? Very important. The Elliott wave theory, the Fibonacci retracement, and the Fibonacci projection will help you in managing your trade and to place your stop loss at the right place in order, okay, to maximize your profit and to limit your risk, okay? So you cut in your losses, have a small losses, and have a big wins. This is about trading system. So we are now looking for opportunity. We are keeping our eyes wide open for opportunity to sell the Australian dollar US dollar currency pair. We know that we are bullish towards the Euro USD. We are in a bit of a conflict situation. This is not an easy trade because the Australian dollar US dollar currency pair, we usually follow the Euro USD. Now, at the same time, we are bullish toward the Euro USD, but we want to go look for opportunity to sell the Australian dollar US dollar currency pair. If you understand what I mean, it's a bit conflicting, but this is what I talk about. To observe the price, as soon as we receive a clear-cut selling signal with the TSTW24 trading system, the swing 240, no, not the swing 240, the TSTW SYS08 will take advantage of it. We'll watch this zone carefully to see whether this is a valid breakout or not. Before I leave you with this video, I will again go through the Elliott wave process with you. The first wave can be divided into five small waves. Okay, so the first wave, the third wave, and the fifth wave. I repeat again, so you master this once and for all. The first wave, the third wave, and the fifth wave can be divided into five small waves. Not always, but can be divided into five small waves. So you may have something. It didn't happen in this particular case, but for educational purposes only, I will just draw something like this. It may be 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 something like this. Okay, so that's 1, 2, 3, 4, 5. The first wave can be divided into five waves. The same thing, we know the third wave can be divided into five waves, also can be something like this. Okay, it didn't happen here. This for educational purpose can be something like this. Okay, third wave should be the longest, so should be something like this, and then should be something like this, and then something like this. Okay, so the third wave also can be divided into something like this, but normally the third wave should be the longest, but this is for educational purpose only. Don't be too straight with me. Okay, and also the fifth wave also can be divided into five small waves, so something like this. I'll give you this is for educational purposes. Okay, this is doesn't happen here, but for educational purposes, okay, can be something like this. It can be something like this. Okay, so we know that the first wave, the third wave, and the fifth wave can be divided into five small waves. Now, the second wave and the fourth wave can be divided into ABC corrective move. Okay, so this is the second wave here. So we have it. This one in this particular case was exactly what has happened. So this was the first wave. This is the A. Okay, this is the B. Okay, this is the C. Okay, so the second wave can be divided into ABC, and the fourth wave also can be divided into ABC. This is what exactly we have here: the ABC and the ABC also in the fourth wave. So to summarize the Elliott wave theory for you is that the market has a tendency to move in five waves. If the wave is a complicated word for you, so the market has a tendency to move in five phases. Okay, five moves. Okay, one move to the upside, one move down, one biggest wave move to the upside, one move to the downside, and the last move to the upside again. So five waves. Okay, 1, 2, 3, 4, 5. Okay, the first, the third, and the fifth can be divided also into five waves. Okay, because they are going in the direction of the trend. Okay, and the third wave also can be divided into five waves because it is moving in the direction of the trend. Okay, and the fifth wave also is moving in the direction of the trend, can be divided into five waves. All the moves that are contra trend, which are full pullback in the uptrend, can be divided into ABC corrective move. Also, the second wave and the third wave can be divided into ABC corrective move. And then we have the end of the five waves. So we count first wave, second wave, third wave, and five wave ended right here. I'll put the spotlight exactly where the five waves has ended for you, so we know exactly this is exactly here. That's where the fifth wave has ended. When we have the fifth wave has ended right there, the market is considered as overbought. Not overbought, but it's considered as overbought because the market can continue to go up, so it's considered as overbought. And then in normal condition, repeat, in normal condition, we should have, after the market being overbought, we should have the A, B, C corrective move. If the market does not find a fair value, we may have a further A, B, C corrective move, A, B, C corrective move, until the price finds a valid fair value. Okay, the ABC corrective move is a contra trend also to the general trend. The same thing in the downtrend. Okay, we'll have 5 moves to the downside. The first, the third, and the fourth will be in the direction of the downtrend, and the second and the fourth will be a contra trend, which is a rally in a downtrend, plus the ABC corrective move, which is another rally in a downtrend. Talking about the Australian dollar US dollar currency pair, we are now watching carefully this zone because we are just touching the overbought zone of the fifth area wave. Retest of that zone, the price break that resistance level of 10168. We'll watch carefully whether this is a valid breakout or a fake breakout. I hope you enjoyed this video also, that you put into practice to start the new year 2011 with success. Until the next time, enjoy yourself and be very happy. We are the TSTW 24 traders. Enjoy yourself and be very happy. Thank you.